Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table. Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We appreciate you joining us today. We're going to focus on trying to help you in your three-dimensional investing, in your financial journey. And we're going to have some fun doing it. My name's Seth Krussman, and I'm here once again with Mr. Ben Brayshaw and Dan Mickelin. How are you guys doing today?
I'm doing great.
Doing really good.
Enjoying our office another day.
It is good to be working at work, right?
That is for sure.
I think that's going to definitely do a tie-in with our topic today. What we're talking about with you today, we're going to get through some other stuff that's going to be a lot of fun here first. But what we're talking about is, where was your advisor when? And you can finish that sentence with many different things, but it has become an awareness that we've had as we've been doing our business daily in the office and staying open and making sure that our clients are cared for and their needs are met, that there's been a shift in our industry of financial planning and planners that frankly are not covering a lot of the bases that they used to.
You know, Seth, you're bringing up a lot of different pieces. I think, as we get into this show, and I think it's going to point out a lot of different concerns that people need to be aware of and the vulnerability it actually brings to their financial management. A lot of companies closed. A lot of companies had to shut down legally. This office, Brayshaw Financial Group, and what we do, we have all been in our office every day for the last year and a half, 2 years through the pandemic without one day of us working remotely. That includes us, our staff, you name it. And I think there's something to be said about that, because it has a lot of intrinsic value around the importance of managing clients' assets, being responsible for clients, and taking care of needs from all sorts of concerns that have arisen out of this pandemic. We were obviously deemed as an essential item, and we received letters from the Department of Treasury to be able to remain open. And we made that choice to do that. We had a sit-down conversation of what we were going to do and how we were going to approach this, because we had the opportunity to work remotely, and we had a heart-to-heart conversation about this. And I think that was a decision that was not part of the norm, but it definitely didn't put us first. I think this show is probably long overdue, but as we see this and as we see what's going on in the industry, there's so many advisors that are not working from their office, and their offices are refusing to come back, and there's concern about that. And we all know on some level that working remotely is not as effective in the grand scheme of the financial markets.
Between the distractions you have at home and access to files and tools and technologies, it's simply a fact that you cannot do as well from home. You can still answer calls, you can still conduct meetings. There are some things you can achieve, but to suggest that you're at 100% operating, it would just really be a stretch.
So we could go ahead and just put a bow on it right there, folks, and that's the show. That's the point. But we do have a lot more to cover here with you. For starters, what about some of that? What about some of that money in the news?
Well, first up, all those meme stocks we're talking about constantly, or at least everyone else is.
All those meme stocks.
But the one that's on the skillet today to get burned is AMC. AMC has been in the news left and right, which has been interesting, right? The AMC shares price has cut in half, more than half, actually, since this article was published by Yun Lee, which this is a CNBC article. And it's just interesting watching these meme stocks, because it's not just AMC that's getting hit in this. I mean, they talk about in this article, GameStop's down 19% this month, Clover Health, Clean Energy Fuels, 34 and 20% in July. Some people are getting burned.
The whole notion of the Wall Street bets and the Reddit guys, rallying behind these short positions and kind of sticking it to the hedge funds, or so they thought. It's a great concept. It certainly worked for a while. But you really better have that timed right, or you're going to be one of the guys left holding the bag. And we're seeing that happen, here with a lot of people who kind of jumped into the market with online accounts, just kind of chasing the news and following the trend without the support of a real advisor who could, hopefully, any advisor out there like we did would, field those calls and let people know, hey, any kind of trade following this movement is pure speculation. I mean, there is nothing fundamentally sound about any of these companies, nothing at all. So you want to take that ride, good luck, but we do not recommend that.
It's just funny that AMC hit a high of $72.62 in early June. And you think about that, and nowhere in the world is AMC worth that on paper. Well, I guess officially it was worth that on paper. But when you break down its value as a company, all its assets, it's just as a matter of fact, AMC came out and said, we're selling shares.
Yeah, we're going to tap into this right now. Got some money on the table. Yeah, the AMC shares still are up over 1,500% on the year. Maybe a little less at this point, but GameStop rally up 800% in its 2021 year. So these are massive gains still, with even being cut in half practically. That would tell you maybe there's more to go.
When this whole ride began, nobody held those shares. I mean, it was, those are the fortunate few who, for whatever reason, owned it at that point. But I get a feeling the majority of the people, chasing the buzz here, bought in at inopportune moments.
I'm sure Ben would like to tell you his positions on these as well, but we're going to skip over that. So, oh man, what else? Powell? Do we want to flip the switch on Powell and what's going on in Feds?
Yeah, I think that's a good call, Seth. I mean, we have an article from Bloomberg. It's by Olivia Rockman. I'm going to play a quick clip here, and I'm just going to break off. It's Michael McKee from Bloomberg. I'm just going to play this real quick.
We have some inflation, a lot more than anticipated. On a month-over-month basis, the CPI rises 0.9%. The forecast was for 0.5%. The core rate up also 0.9. The forecast there 0.4%. On a year-over-year basis, we now hit 5.4% for the CPI, and the core at 4.5%.
If you listen to that, folks, that's a pretty harsh number to absorb, 5.4% in a year-over-year CPI index increase. And I think what that's saying is that, folks, last year you were paying 5% less than you're paying now, 5.5%. And, that's not even getting into the energy and so forth. The video clip, it's a minute and a half. You can go out and watch it. It's right there on Bloomberg. And you can really dig into how we're getting impacted in inflation. And it's happening everywhere. And the Fed's not even budging. I mean, they had a recent, Powell was out there recently, said, hey, listen, we know that, Goldman Sachs is saying inflation's running up crazy and it's out of control. I kind of feel like it's a little out of control. They're saying we totally have the steering wheel here. And I mean, those aren't his words, but
what I found more alarming than, or at least as alarming as the 5.4% is, as McKee there was just talking about some of the specific underlying measures, the Fed estimates were half of what reality is. So we're listening to the Fed guide us through this now as we continue to print money, and what we're seeing in real time, in terms of their expectations looking forward, we're running at least double that.
Yeah, it's crazy, and they're just saying that it's low. It was so low for so long that being super high for a short period of time will give them the average they want. I'd like to think that works.
Doesn't help you at the pump.
One of the things that Powell highlights is this, the why of this increase, and he doesn't really, talk too much about they're underestimating how big of an increase this would be. That is a significant, wow, they really missed the mark on that. That's surprising. But the, pandemic related bottlenecks and other supply constraints really created this perfect storm of demand, low supply. And, in his perspective, they're not going to raise rates one time due to kind of this, once in a lifetime type of a scenario that's going on with the supply chain. And that did make sense for, what they're looking at in the future. And it'll be interesting to see if there's, some kind of a leveling out here in the near future around what those indices are going to be saying.
That's a good point. I think what adds there's so many global dynamics to inflation, and a lot of people know they exist, but they don't necessarily know how they connect, right? Like you think about, we've talked about the Keystone Pipeline, and there's all the pieces about how there's lawsuits being waged, and Canada was supposed to make a ton of money on this pipeline. Now that doesn't exist for them. The speculation of how they're holding wood from our country as kind of like a well, you're not going to play in my sandbox, I'm not going to play in yours. But that's really how people respond. That's how countries respond. That's how they think about
international trade.
Yeah.
Right.
And, you think about that, and then you think about, hey, well, OPEC, some Middle Eastern countries or whatever, or Brazil, I don't know who it was, but somebody had some sort of tiff, and OPEC decided not to meet. And all of a sudden, now we're not letting more oil out. But right after that, price of oil went down, which to me, still doesn't really make entirely perfect sense. But do I think that this, hey, listen, if they're gonna produce more barrels of oil, that means there's more oil to use, therefore the price would go down. But we have a constraint here, and we're having a massive increase in the price of oil. So I don't necessarily know who's controlling all these dials, but I will tell you that there's a lot of pieces that are moving, and I will tell you that I think that oil is absolutely the biggest driver of inflation, in my opinion. It is what we do in America. I mean, you look at all the tractor trailers; they're all moving stuff. I mean, we have trains, but that is a very small portion of the the infrastructure in transportation in our country and where stuff goes. And you watch the price of oil, and it's going to hit $4, $5, $6, maybe $7 a gallon, possibly. I mean, I've read reports that are crazy numbers of where they're sending us. And all the fight for green energy. I understand it. I appreciate the idea of green energy. But I look at California and I say they are an absolute catastrophe when it comes to energy. So, I mean, people are scared to death of what that looks like. And I think we have a real conundrum that we're going to have to, it's going to be duking it out between governments and pipelines and all of that stuff till we get this thing under control.
Some of the incentives around that green energy are starting to decrease as well. It used to be 30% for the solar panels, and now it's 26, I think, for the credits, income credits, for the next couple of years, and that is probably going to actually push a significant amount of that industry. People kind of trying to cash in on that, but long term, down the road, is it really a resource that's going to change how dependent we are on oil and that infrastructure?
It's funny you mentioned that. I actually did have a guy come to my house to look at solar panels. So I think you're right on that 26% item.
I'll tell you, I know I'm right because I actually just had a meeting with a solar panel guy here before we got on and started doing this. So it's pretty top of mind for me.
Yeah, no, it's interesting. But I was also thinking about, the price of these things, and then you got batteries and everything else. It's so astronomically high that you look at it and you say to yourself, well, how am I going to make that happen? How am I going to make this a financial viable solution? I got to come up with all this money to buy it, and it's just unaffordable. So now you're looking at the fact that, well, we're going to need more government subsidies to fund that.
Yeah, some of the numbers that he runs typically are minus the government subsidy.
Yeah.
And it's still, depending on how many years you're taking the project out and what part of the country you are, it still makes sense, which I was like, that's great. That's gravy. That's you and your CPA if you can get down to the tax on that. Well, no pun intended. But yeah, I mean, it's pretty amazing what solar can do long term to save you money and help.
Yeah, absolutely. All right. Well, next on our list, last for today, we have, I think everyone's heard about Richard Branson and his travel to space.
I think this might be a first for him appearing on Money on Tap, though.
Yeah. We tend to focus on Bezos,
Yeah.
That's our guy. But
Yeah.
It's interesting. Billionaire Richard Branson has been under the limelight of interest and criticism, and I think this article does an interesting job at explaining it. Seth found this article. I think it's great. Yahoo has it out here by Scott Stump, and It's just interesting that so many people are criticizing Branson for, not spending his money on the needy. It's amazing how so many people have an opinion on how you should handle your own money. As soon as you're
he even agrees with them. His quote says, "I 100% agree that people who are in positions of wealth should spend most of their money, 90% or more of their money, trying to tackle these issues," which are, ad infinitum to the issues, but one's primarily concerned with, inequality or clean water and all these things that are definitely.
Except him, though. Except for him, he's able to decide not to do that and choose another alternative path.
Oh, I think the argument, which is, it's worth making. People want to let's do more with our money to help the planet and other people. We agree with that wholeheartedly. But to take this perspective is they're eliminating the opportunity for innovation, which is a huge part of what possibly can solve these other problems going on with our world, because that is it. Technology and innovation solve, clean water, all those kind of things. But there's also a whole other industry that they're not even addressing. It's like, well, if that's the case, you probably shouldn't have Disney. You probably shouldn't have Netflix, because they're entertainment and they're not solving the world's problems. So the point is that people love to tell anyone that has money what they should do with it, but are rarely willing to take a look at their own finances and say the same thing.
Imagine
all that.
I'm sorry, Seth, but imagine.
I was just going to say, look at Disney. Disney needs to solve the world's problems. People need to Netflix. They need to stop spending money on entertainment, period, and just go solve the world's problems.
Well, I'm just thinking about it like, it's funny that he says, I 100%, this is a quote, I 100% agree that people who are in positions of wealth should spend most of their money, 90% or more of their money, trying to tackle these issues. But we should also create new industries that can create 800 engineers and scientists who can create wonderful things that can make space accessible at a fraction of the environmental cost that has been in the past. End quote. Now, who made him the deciding factor that, one, it should be that way, or anybody to be that way, but who also made him God to say that he doesn't have to abide by that, which is complete narcissism, by the way.
Yeah, I think it's his checkbook. That's what made that possible.
So everyone else should feel guilty that they're not expanding jobs. What happens if everyone decided to expand jobs? Oh, you mean capitalism? Oh, that's a genius idea. Sorry.
Yeah. I think we should just stay home and not do that.
I think it's absolutely ridiculous that these wealthy people think that, one, there's a rule that you're supposed to live by, and two, that they're never to abide by it, even though they say they 100% agree. It doesn't make any sense. That's like telling me to say, hey, forget it. I'm not going to get into that.
Yeah, we could pick apart the hypocrisy, I'm sure, all day long. And that's probably another show for us if we wanted to do a little spinoff of Money on Tap. Folks, you're listening to Money on Tap. We've gone through money in the news. And when we come back, well, we're going to be talking about, where was your advisor when? Fill in the blank. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Don't go anywhere. We'll be right back. Folks, we have a lot of fun doing this show, Money on Tap, and Ben and I have been financial planners for years and years, and our goal here with you is to bring you into the room, have the conversations that we have. We think these are critical conversations for you, but we understand this is a limited space. And what we'd love to do is to open the doors to you with us at Brayshaw Financial Group, so you could experience what it means to have three-dimensional planning in your life. Let's take a look at all sides of your situation, your scenario, and see how we can put together the best plan possible, taking into account your risk. How much can you have in the market? How much do we need to have set aside and doing different things for your life? That's what we do as planners, how we engage with you, and we welcome you to do that with us. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Now, if you have $250,000 that are investable assets today, our planning is free to you. We want you to have the playbook to have a successful experience in retirement. Give us a call, 855-226-8551 or info@yourmoneyontap.com. Ben and I welcome you to Brayshaw Financial for complete wealth management.
Now back to Money on Tap with Ben and Seth.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And today, folks, we are talking about where was your advisor when? And you can fill in the blank there on that. There's certainly a lot of opportunity. And as financial planners and financial advisors here at Brayshaw Financial Group, there's ways that we take a look at ourselves and say, gosh, I wish I could have, or I could have shown up differently in that situation. We're just human beings, right? But there's also that question that runs throughout our practice that has created an environment here that is probably very different than what most people experience working with financial planners. And we're going to talk a little bit about that today. But I think, first of all, there was an article that Ben found. And I do like Ben, I appreciate you giving me credit on the article that I found about Richard Branson and that you liked it. I'll go ahead and give you the same back. I really like this article. I'm glad what you found here.
Well, this was just in a Financial Advisor magazine. I just thought it was interesting, but you're welcome, Seth. And thank you in return. It was just interesting. And I think this is what really kind of got me, we were talking about shows and I just said, there are differences between financial advisors. There's investment differences, there's personality differences, there's strategic differences, there's types of investing that people do or don't do. We're going to talk a little bit about the different types of advisors. We are three-dimensional advisors, as we call ourselves, because we work in brokerage, fee-based, and the insurance realms. We bring all of those together, which is not necessarily a common piece to the story. But when it really comes to where you stand in commitment, I think there's something to be said to that. And, one thing that we have done here, and we talked about it earlier in the show, was we decided as a group to remain 100% open. We had been given, the letter by the Department of Treasury, basically a get-out-of-jail-free card. We could go travel anywhere we needed to do. We run a compliance portion to our company where we oversee other financial advisors. So we have a lot of infrastructure here that we have to maintain and adhere to. And so when we sat down, we had this conversation. We really broke it down and said, we cannot accomplish or meet the goals of our clients remotely as well as we can here at our office with the tools, the information, the structure, the files, everything. Everything would be delayed. The process to get anyone's information done, we could do transactions, but could we do them as well? Can we have our meetings? Can we do all the pieces we need to do if we're not here at our office? And when we came down to the fact that it just isn't possible, that everyone would lose on some form or fashion if we went 100% remote. And, what's interesting is because I think every listener knows that exists on some level. I mean, I think we all intrinsically know that, not as much work gets done. You get distracted. Kids are running. Can you get your work done? Yes. But our trading realm is between 9:30 and 4. If the child runs in the room at 3:50 and I'm trying to get a trade through, and that doesn't happen that day, that's an impact that is time sensitive. So we have so many time sensitive things in our world that remoteness we knew would jeopardize some of that stuff.
In this industry, more than most, time is money. In that example you just shared, one trade day to the next, if you miss execution, there's a good chance you just cost somebody something. And that's the kind of reality that, we just felt we just couldn't allow to creep into the practice. That's just not the way we do business.
Yeah, and then this first article that Seth was referencing was, it had a statement in it. It's 34% of wirehouse advisors say their firm stumbled during the pandemic. That's wirehouses. We're not wirehouse advisors, we are independent advisors. We work for ourselves. We work with an independent broker dealer, and people don't tell us what to sell. We're not employees for another firm. But 34% of wirehouse advisors reported reduced levels of support from the home office, and 29% cited disruption of business services, the study said. Wirehouse respondents said they experienced these negative effects at about double the rate of non-wirehouse and independent advisors. So the independent advisor space was significantly less interrupted in general. So if you're working with a wirehouse, you probably experience some of those problems because they're well known. If you are one of the lucky ones, that's great. I'm glad that worked out for you. But this is the real deal. Like, what is going on? And why is this such a big deal? Because what I have found is that advisors are still not back to the office. I mean, I literally know hundreds and hundreds of advisors who, we meet at, this, that. Listen, I went to a CE thing that had a golf thing in the afternoon. It was great. I had to go to the CE. It was one of the things I needed to do.
Continuing education for
education.
Those, yeah.
You know what? Almost every one of them was working for their house. And I was like, oh, well, we never closed. I'm like, how did you do that? There's no way. I really don't think there's any way you can provide the level of service and competency and response time in a remote environment in the financial world.
I mean, we're so dependent on our assistants and the help that we have in our office, and the vast difference between getting up from your desk, walking down the hall, and grabbing someone's attention versus sending a text, making a call, sending an email, wondering who's where, and just it's just the simple human connection to relay instructions, face to face versus leveraging technology. It's just incredible.
Well, I think it's funny too that we didn't just have a normal environment. Like, it wasn't like, hey, everyone's getting their coffee at the thing. We had all our staff. We had all our kids in here. I mean, we literally hosted a classroom. We have classroom seating in one of our conference rooms, and we had kids in there. We had the parents rotating in and out, teaching their kids. I mean, we've talked about it and joked around about it on the show a couple times, but in reality, that's exactly what we did. I mean, I literally know all of our employees' kids by first name. I mean,
yeah.
They come in, they want to talk to me.
I spent a year with them.
I spent a year with these kids. I know these kids. They're my family.
You're Uncle Ben now.
Yeah, I'm Uncle Ben. So, but that was a real decision to make. I think it's interesting because now financial firms, and this is an article that I had pulled up, and we didn't even talk about it, guys, but it just was something that popped my head. But J.P. Morgan literally said they were having trouble getting people back to the office, to the point where they said, and this is a CNBC article by Hugh Sun, that they told their employees they expected them back to the office on a rotating basis by July, and that they're expecting them back full time by fall. They have to tell them to do this because people are just happy being home on some level. But JP Morgan knows that they're going to have to stop paying people to make them come to the office because they realize they're losing productivity. So if you have JP Morgan realizing that productivity is going down and they're not being able to accomplish their needs, then you have to know that your financial advisor needs to be back at the office. And I guarantee you there'll be financial people listening to this show saying, uh-oh, I better get back to my office.
Well, strange times. Circumstances were what they were. I mean, no kids were going to school, at least very, very few that I'm aware of. So what do? You got to figure out a way to make this whole thing work. And you're right, being in person and the team environment is so critical for us to be able to be as efficient as possible. And it all revolves around our clients, of course, and what are their needs. I think this next year, when hopefully people are going back to school full time like they used to, I think that'll lighten the load of a lot of moms and dads that were having to work remotely as well.
Absolutely. I think you're right. And I think that will bring things closer to where they should be. And I think, Seth, you brought up the idea, and I want to pass this back to you, but you wanted to talk a little bit about the types of roles of advisors. Yeah. I think you should jump into that because I think that's a good point for you.
It is. Yeah, no, I appreciate that. And I think it's one that's close to heart for me because I've been at several different places licensed. I started out as a stockbroker, and the offering there was certainly to try to be a financial advisor, but it really was just looking for people that had money, wanted to invest, buy this, sell that, and predominantly what's called a Series 7 license, which is transactional in our industry, to just do the buy and sell and make a commission on the buy and the sell. But it's where I got licensed, and after that, I've worked at banks, I've worked at the wirehouses, which you mentioned earlier, and while I was at a wirehouse, and I was working really for some portfolio managers in their books, doing a lot of different things, but I realized that this is not really the environment that I want for my clients, and the differences were pretty significant. And that's when I reached out to Ben, and we were, best friends for a long time. And frankly, Ben had been telling me, you need to get over to the independent world, and talking about that for quite a while. But as I started to go through these different channels of interviewing different advisor shops, different, you name it, whoever's out there and is a name, I had an interview with them trying to figure out what was going to be best for my clients. And it had to come back. I mean, that term of fiduciary is what really dictated for me to go the path, Brayshaw Financial independent path, and doing what we're doing today, which is three-dimensional investing and complete wealth management. But a lot of people don't understand what all these places are out there that are, operating in the industry. Like, what purpose do they serve, and what are their limitations, or what do they do really well? And that first one I mentioned, which was a stockbroker or a registered representative, is really just somebody that is in a retail environment calling people up to buy a stock or a bond and sell it. That's pretty much it. And a lot of them have transferred or transitioned over to a Series 65 license, which is considered an investment advisor license. That's all what NASDAQ calls it. But what does that term financial advisor really mean? And it's pretty broad, but that financial advisor typically is operating on a fee base. And we talk about brokerage, we talk about fee base here, we talk about insurance, and all of those pieces coming together or having their place for our clients. After that, you have the investment advisor representative, or an IAR, and it's considered a alternative to a financial advisor. That is, official term, really, advisor gives financial advice to clients in return for compensation. But an investment advisor is a fiduciary standard under the law, the higher standard for financial professionals. And that's kind of that difference between that Series 65 license and that Series 7 exam that differentiates the investment advisor or that financial advisor term. And then financial planner. So we talk a lot about financial planning on this show, and it's really what we do at Brayshaw Financial Group, which is, we help individuals, corporations to meet short-term, long-term financial goals, all of the things in between, by really getting into the meat of each client's current financial standing or where they're at, and developing programs around our clients to meet their goals or their objectives. And we use all of what's available in the industry of finance to accomplish those goals. I think that's
I think that's good, Seth. And I think what gets confusing here too is because there's lots of ways to become a financial planner. You can have a CFP, or you can get securities licensed for that. That's a 65, as Seth said, and there's a lot of other licenses. Like Dan and I have a Series 24 license, which is a registered principal license. It's a supervisory compliance license. There's a lot of education, a lot of involvement in the securities world, as a lot of people can understand. But I think where it really gets scary is when you start walking into the insurance agent only world, right? Because they try to mimic, look, sound like a financial advisor or a financial planner. They might even call themselves that, but they may really just be, looking at an insurance solution only without having the ability to have an unbiased approach. And I think that's one thing that we all have, we've been friends, all of us, for decades upon decades. And And I think, working together and having that friendship, it's interesting. Dan and I and Seth don't agree on everything, but one thing we do know is that we truly believe that providing all these resources and opportunities to our clients, being able to provide them, a retail commission-based account when that makes sense, or providing them a fee-based account when that makes sense, or providing them insurance, and being able to say, no. Whoever you talk to, this is what's best for you, really creates that dynamic. And I think that's important because as people look at this, it's easier probably for an insurance agent to work from home and maybe not as heavily impacted. But for the level and detail of work that we do and having all those components together, it's really, we cannot be as effective remotely. And I honestly think that if we had to go remote, we'd probably have to educate our clients on the limitations we would have. And I think they would have to understand what that would do to how our response time would be, what expectations we would need to, set, because we have a different set of expectations working here in the office, right?
Yeah, I mean, we all fill different roles, on behalf of our clients. And, I made the point earlier, access to our staff and all the tools that we use is critically important. And, without being able to do that in a kind of very immediate way, at the very least, we'd have to, really ramp down the response time and, the expectation level that we set with our clients would have to change. And, the decision we made was to not do that.
Yeah.
Folks, you're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And we are talking about where did all the advisors go? Where was your advisor when? And recently the pandemic has really changed and altered the landscape of so many of our work environments. But our industry as a whole has really transitioned and is still in this transition point. We feel strongly that, an office environment allows us to do what we need to do for you. And how did we do that? Well, it was a lot of fun, folks, and it was a lot of interesting days here at Brayshaw Financial Group with the whole family on board. But that's what we're talking about here, and you can reach us again at 855-226-8551 or info@yourmoneyontap.com. When we come back, we are going to be talking about the reasons, not just our experience, but there's some reasons why Zoom is just not going to be able to replace face-to-face meetings. We'll be talking about that here shortly. You're listening to Money on Tap. Don't go anywhere. We'll be right back.
And to quote one of our favorite people in the world, Bill Belichick, head coach of the New England Patriots, he's often said about players on his team that the most important ability is availability. And I think that's something that certainly translates into this world under these conditions, in this time.
Anymore, it seems like it's a superpower.
That's well said.
Call us today at 855-226-8551 and get your free consultation with Ben Brayshaw or Seth Krussman or any one of our partners and find out what's going on in your plan, your estate plan, your financial plan, or what you're planning at all, if nothing. Get it fixed, get it right, get it done today. Give us a call at 855-226-8551.
Now back to Money on Tap with Ben and Seth.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Folks, we are talking about face-to-face or virtual.
Nice to see you, Seth.
Thanks. It's good to be here with you too. Yeah, so there's been a ton of virtual over this last year, and it's understandable why. Different states doing different things, different, wherever you are, and organizations at large having to respond to pandemics. But at Brayshaw Financial Group, we're an independent, is one of the things that we talk about, being an independent advisors, and really very boutique shop experience when it comes to meeting with our clients and we have friends and family that are a part of our businesses as well. But the change for us in the pandemic was one that we recognized the safety factors of what we needed to try to provide, but also how being in person is a huge value to each of us, but it's also significant for our clients. But there's reasons for this, and there's some research out there. We're going to get into some of this, and it's really some interesting stuff that Dan was able to pull out.
Yeah, I mean, the whole nature of how you meet with people obviously changed, and I think one of the things that was a benefit to us in being independent is that we didn't have firm policy that we had to adhere to relative to that. So we were able to make a decision on behalf of ourselves, and for our clients, and just find a way to structure our business around that and kind of keep the ship moving ahead. And that's significantly different from being an employee of a larger firm in that sense, where they simply mandate this is how we do it from now on. So that ability to make that decision, I think proved to be invaluable for us and for our clients. And it's not as though we were meeting everybody face to face in the thick of this thing, but we were able to conduct those virtual meetings from the office with everything we need at our disposal. So we were able to maintain the social distancing requirement and do the right thing on behalf of the stop the spread and all the rest of the stuff you would hear. But we were doing that from a fully equipped position. We had the technology in place already. We had all of our tools, and we were able to conduct business, really without much of a hiccup, given the fact that the outside world was crashing and burning, and everybody was in, deep state of fear throughout.
Yeah, and I think the other thing is that's interesting is that I know we weren't the only advisors out there, because I remember that there was a group of us that were petitioning the broker dealers to seek the exceptions, and the Department of Treasury did honor that, because they made the point of one of the things about financial crisis is that most of the fraud is discovered during that time period. So that's one of the things that has to happen as being compliance officers and reviewing people's books and records and doing that compliance piece. If there's going to be tragedy found or fraud found, these are the times that they expose themselves the most apparent, okay? In positive market years and so forth, it's harder to find that kind of stuff. So that was really an interesting argument that was made that caused a win, and we had that on our backs as well to support that move. So there's a different level of that piece. I think the thing is we did do, I mean, for people who didn't care about meeting in person, I mean, I met with a bunch of people in person that really just wanted to do that, and that didn't really bother me. And I think I had COVID, 2 Februaries ago anyway, so long before they knew what it was. But that being said, I'm just one of those guys that, it is what it is. You want a hug, you need a handshake. I've never really been opposed to that. But
how often have you received a text from somebody or sent a text to somebody and it's just not received the same way that it would have been on a phone call or even better in person? I mean, did I send too many emojis on this? Did I send not enough? Was my response curt somehow that I didn't even realize it?
Oh no! You walk through the door and your wife's like, "Are you mad at me or something?" I'm like, "No, not at all." She's like, "Well, why were you so cold on your text?" I'm like, "Oh, sorry, I wasn't trying to be."
Yeah. Well, it was actually Spencer, my oldest, that pointed out that I was being very disrespectful to him in a text or just curt with him when I did not actually type out thank you. I just did TY. I thought that's what we're doing these days. I thought TY for thank you is okay. We're moving on. But no, got to write out thank you. But, body language is one of those things, right? Right. When we're in the room together, we can easily pick up on what's going on. And that's one of the main reasons that we usually want to meet with people in person is because, words only accomplish so much.
Yeah. I think Seth too, with the body language piece, I think, that's hard with Zoom and we've met. I haven't met all of my clients in person ever. I mean, that's just, I would say 80, 90, 95% of them I've met. I have a lot of clients in California I've never met in person. But there is a trust thing that's established. It's either verbal, it's visual, there's things like that. I do think trust and working with somebody and the collaboration and all of that stuff is easier to attain to a faster, quicker realm in that three-dimensional space, right? You're in a conference room. You're kind of reading the person's body language, and you understand, hey, this person's doing it. I think the biggest loss on Zoom and that kind of remote world, which is why, some of the statistics are bringing people right back to the office, is the fact you can't just lean over and say, no, right here on this piece of paper, and pick it up and show it to them and point to it. I mean, how many of us have looked at a Zoom meeting and been like, I want you to, no, not that page, it's the one, and you're like trying to show it on the picture, and it's an absolute cluster. You can't even figure out what's going on, and so the person's just as confused, and the message is not as clear, and the learning environment is just not as strong.
And that's assuming you're not having connectivity issues, and the internet connection's working for you, and you're dealing with people on both ends of the line that actually know how to use Zoom. So you have all those technical hurdles that come into play. That when you're sitting in a room face to face, everybody knows how to have that meeting. When you're trying to wrestle with technology that you're inexperienced with, you're so distracted by, is it actually working, and are they hearing me, that you miss half the message in between.
And I mean, we actually already, before this whole pandemic started, I mean, we had purchased Zoom room equipment. We were Zoom lovers. I mean, we literally had, Dan, my TVs, Dan's like, oh, you're buying another TV? I was like, yeah, this Zoom thing is amazing. He's like, really?
Amazingly expensive, I can tell you that.
Amazingly expensive. But boy, I was foreshadowed the pandemic, Dan, didn't it? Because then ordering all the equipment became very difficult. So Dan was like, you were right on that one. So
It was like the week before. I remember that meeting very well. Going over all the different things, and I was like, hey, well, this is really cool. We're going to be able to do things differently.
I remember Dan saying, we probably won't use this more than once every few months, maybe. We were using it 5 times a day.
That's true. That's a true statement.
So, but bringing this really back, I mean, Zoom fatigue is real. I think this article, Dan, you found was fantastic, because Dan and I had this conversation about this show, and he was like, I got an article or two, and I'll find something else. And this was a good one. How many of us hate being on Zoom now?
I was surprised, when I started just looking for material to discuss, how many times that came up, Zoom fatigue, and all these studies by leading universities. And, I don't love Zoom, but I did not realize that it was causing these like life-crushing, side effects to people all around the world. And, one of the things of the Zoom fatigue kind of bullet points that I found just intriguing, it's, the studies have, yielded that people find watching their own face incredibly stressful. Yeah. Because now you're managing body language of your own, right? So usually when you're in a conversation and, you're trying to read the other person's face to see how they're receiving the information you're trying to deliver. But now on Zoom, at the same time, you're reading your own face. And what it says is people's reactions get amplified, and right. you just become too self-aware of what you look like in the process, and you're losing focus on the actual subject of the conversation, dealing with your client. So there's this added stress of, monitoring your own face throughout the process, which is just incredible.
No, it's true though. I mean, how many times you on a Zoom meeting and you're like, I'm actually only looking at myself.
Yeah, I know, you're adjusting your hair. It's just like good side, kind of shifting around, It's
just you talking about it. I mean, not only does it make me laugh, but it stresses me out. I'm like, how am I going to have to sit here and look at myself for an hour?
I was on this super important call, and it was funny. It's this, whatever. It's a long story, but one of the points was the kids run in. And this guy, big executive, whatever, kids come flying in the door, the doors crash open. It was just very funny. And it's just, we've all seen some very humorous events happen during this period of time. And that's just is what it is. And it's part of how we're growing as people. It has made the personal connection a little unique. I mean, you're like, oh, yeah, remember when your kids, maybe draws you together a little bit. I don't know.
Everybody's met my cat, I can tell you that,
Folks, you're listening to Money on Tap, and we're talking about where was your advisor when? And some of the stuff that we've done here at Brayshaw Financial Group, really revolving around our clients and needs. I applaud, actually, all of us, and Ben, you for leading the charge on that. Thank you for doing that. We're going to take a quick break. You can reach us at 855-226-8551 or info@yourmoneyontap.com.
Ben, how often do we have somebody come into the office and they don't have a financial plan?
And how critical is it for us to put the pieces together and make sure that their future, their retirement, is a successful experience? We talk about it all the time here at Money on Tap. If that's you, give us a call at 855-226-8551 or info@yourmoneyontap.com. Whether you have 100,000, 500,000, 5 million. Look, folks, we have the right planner for you. Whether it's Ben or myself, Seth Krussman, we're here for you to get the plan together and make sure that that next step is right.
Now back to Money on Tap with Ben and Seth.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We are talking about where did your advisor go when? And we're going to land this ship with some of the communication styles and some of the numbers around pre-pandemic, during, and post-pandemic, some of the expectations. And Dan, please lead the way.
Yeah, I know some of the statistics we found that have been produced coming out of this thing were pretty interesting to take a look at. You know, prior to the pandemic, 56% of meetings or communications between an advisor and client were held in person, right? Which, you know, that's including your, checkup calls and all kind of communications, which would make about sense, for, every time you're dealing with a client, probably half the time it's on the phone, half the time it's face-to-face. But prior to the pandemic, only 2% of those instances happened over a video call, which would be your Zoom and all those kind of platforms.
Right.
Obviously the pandemic brought about huge change, and that number shifted from 2% to 48%. So nearly half of all interactions were done on Zoom, fatigue included. But what's interesting going forward and looking down the road as to what the kind of future of advising looks like is that the expectation is that 34% of future meetings will be conducted that way. So nearly a third of the business we conduct and the interactions we have with clients, we'll be leveraging technology like this.
Yeah, and I think it'll become, it definitely has become something that's kind of ordinary now. Like, oh yeah, I'll do a Zoom call with them. I think that will become like the Zoom fatigue we talked about and everything. I think that's going to kind of go by the wayside because people are going to move back to the office and say, hey, I can do a quick Zoom call with you. I've already have that trust, already have that connection. And honestly, there's a lot of people who would never have done that before when that's really all we needed. And they would go out of their way to schedule a meeting, take time off from work, come to our office. Now they can say, hey, you know what? I'll be like, no, it's a Zoom call. It's literally 15 minutes tops. We'll get this done, take care of it. Because expediting your needs is really what we want to do.
You eliminate all the commute issues and the scheduling issues, and it certainly makes life easier. And
it's interesting that there's an efficiency for us in the office, of course, with the communication and what do we need to do here in the office. But when it comes to our clients and communicating with them, there's an efficiency to Zoom as well.
One other thing that I think is interesting is that during the pandemic, they'd mentioned that about 12% of people were still meeting with their advisor. And I would say that's probably about right. I would say, that 10 to 15% range is probably what we saw. And most of the time it was because it was something urgent, important, we needed to do. They had to sign paperwork. There was something involved with urgency that really brought someone in, or they just wanted to go over something in solid detail that they felt like Zoom could not have accomplished, and it was relevant enough to them to want to be in. About right. I would say that I don't think the face-to-face world's over. And I think, for the advisors that are still sitting at home, I think they're really missing out on that. And I think their clients are too. I think that's part of the real differences that we are. Is, I think that's one thing I love about you guys and all the people here, Tony, everybody, is we're 100% committed to this. And I think your actions in this side dictate a lot. So
I think it says a lot if you're, just unwilling or unable to meet somebody. When you're dealing with matters of money and the significant impact it is on a person's life, the trust me factor is just so important. And if they feel like they need to see you and shake your hand to understand something, then you got to be available to do that.
Yeah.
Folks, we are here in person. You can reach us at 855-226-8551 or info@yourmoneyontap.com. You can also find us at Facebook. We're at /3D Investing. We're also on Twitter at BFG_LLC. And as always, you can also find us at yourmoneyontap.com. Make it a great week.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.
Well, bye.